Welcome to the week-ending market review at Wealthy Bucket. This review is designed to gauge the quality of the Bucket Weekly Market Forecast that we send to our premium clients each and every Sunday that prepares them for the upcoming trading week. Before we begin, Wealthy Bucket does not provide investment advice. Before investing on your own, please consult a financial professional to see if trading and investing on your own is for you. Trading and investing in stocks, options, futures, and currency carry risks that can result in a financial loss. So, what has happened in this past week, or the past 8 days for that matter? Now, if you've been following at least our free videos, you would know that we talked about how the market is expected to break upwards, or break downwards, depending on what the currency markets are going to do. And as you can see, we were calling for that for 3 weeks. If you're going to trade on a very short-term basis because of the way the market was performing. I'm creating a circle or forming a circle around that. And trade very, very short-term, or have both bullish and bearish positions on the go or ready to go. Because the market can't sustain that sideways action for very, very long. You can see when the market consolidated during this May period of this year, it broke to the upside. And the pattern's very, very similar. However, the market decided to break to the downside. The problem with the market breaking to the downside is most retail investors are long equity. Most retail investors buy and hold stock. And it's okay to buy and hold, or buy and hold for a duration if the market continues to go up. But if you don't understand how to manage those trades in terms of where the market is going to stop and think about it before it continues to move upwards or downwards, then you subject yourself to market forces, and you could subject yourself and give up a lot of profit. For example, from the high set back on July 24th to the closing price today, which is 1925.15, the market has, the S&P 500 that is, has retreated roughly 3.3%. Now 3.3% is about 42% of the annual gains beginning on January the 2nd. So you have to understand, it took from January to July 24th to gain about 7.8%. It took 8 days to wipe off 42% of the annual gains based on the index. Yes, I know there are some stocks that did perform better, and there's some stocks that did worse. However, you always look at a benchmark, and generally speaking, most stocks will travel in the direction of the overall market. That's what we do here. We have to identify where the market's going, so at least we position ourselves right. And by positioning ourselves right, it means, am I looking for something to buy? Am I looking to hold? Am I looking for something to sell? You get these three things wrong consistently, and you're just going to lose money anyways. You get these three things right, and you have a high probability of success over a short and long period. And we want to show you right now the quality of where our levels are based on our market forecast. And we called for this 3 weeks ago, that if the S&P closes below 1952, then there's a high probability that the market will retreat, or the S&P 500 will retreat back to this 1914.46 level. Now the low of today was just shy of that. The low was 1916.37, so we're a little bit off by a couple of points. A little over 2 points, and we're okay with that. We're showcasing you this because when you understand how to identify where the levels are, whether to buy or to sell, then you can learn to let your positions run to the next level, whether it's going to be on the upside or it's going to be on the downside. This way, as an investor, one, you're not dependent on a buy and hold strategy, and two, as a trader, so to speak, you're not dependent on the little bits of support and resistance found in between the levels. Anyone who's got time to sit there and look for support and resistance, you're going to be trading too often, and you're not going to let your positions run as far as they should, which means, again, you're going to trade too often, or your losses are going to chew up your gains. Now let's take a look over at the Dow, and our Dow, sadly, our support level after it crashed through this level here. Recall our video on Wednesday, it was sitting here. If you haven't watched our video on Wednesday, go watch it. We said if the Dow closes below 16,855.60, go watch for it. Can't make this up. The Dow will travel down to 16,606.27. Our level was a little off, as you can see. It didn't stop on it. It didn't close on it. It closed below that. So we may have to look and recalibrate that level if we identify during our market forecast this Sunday that it is inaccurate. The takeaway, the take home, so to speak, is if you understand where these levels are, and this is why we identify them, and we advise you, we inform you where they are and what's going to happen if the market does this, then expect that. If you can understand how to read the markets, then you can learn, again, to not take too many trades, cut your winners off, cut your losers off when you're supposed to, which I will show you, and learn to let your winners ride, and that is the holy grail. Let's move ahead to the NASDAQ, and you can see how the NASDAQ broke below and traded right into our level here at 43.2889, or between 43.02 and 43.28, as we had expected if the market breaks down. And that's why these levels are so important, so that you can understand, am I supposed to, if the NASDAQ breaks below this level, I should start to get out. If it holds here and continues to move up, I can continue to hold, or I can look to get into new trades if the distance from the level to the next target is worth it. Let's take a look at the Russell, and the Russell traded right into our long-term support level here. Don't have to spell it out. If this level doesn't hold, we're going to see a further bottoming of equity markets, and if we see a further bottoming of that, then we could have more trouble, but we won't know that until we look at the markets fresh again this Sunday to prepare for the next week. So that is your takeaway, why the levels are so important. And of the 3 out of 4 indices that we had created levels for to assist with our premium member market timing was absolutely accurate. We were a little bit off on the Dow, and we'll have to revisit that. Now let's move ahead and take a look at some of the trades that we had identified last Sunday and provided them to our members on Sunday to trade this week. On Sunday last week, to our premium members, our note, our Bucket Weekly Market Forecast, mentioned and suggested that it was advantageous to be both long short in the current market. And just because that the market wasn't moving in any direction, the currencies weren't moving, specific currencies weren't moving in a direction, so the end result was the market wasn't moving. However, when the currencies broke, then you could expect a significant move in the markets, and there's no way of knowing ahead of time exactly where that's going to break. It's 50-50, so why not spread that risk and ensure that your risk-reward profiles are in your favor and take both north-south or long-short trades at the same time. So let's take a look at a couple of the ideas that we had sent to our clients through our MoneyFlow service. And let's take a look at the NASDAQ future. We talked about having short-term trading ideas because the market wasn't moving yet. And our idea had kicked in on the Monday. We had sent this out on Sunday and said, if the NASDAQ futures pop into the 39.36 level, we're willing to risk this much, which is 39.0850, for the reward of the opportunity of 4018.02. As you can see, it started showing little signs of being profitable, and then it faded out really quickly on Thursday. So that was the long idea, or the north idea, so to speak. And the south side trade, or the short or the bearish idea, we had identified a bear call spread on the SPY, which is the ETF that tracks the S&P. And you can see here we had notified our readers, our premium subscribers, that if the market closes below, the ETF closes below 197.08, then trigger in an entry into this bear call spread. And it has paid off very, very well. It's made up the losses and then some of the, and will continue to make, because we sold these premiums. It'll continue. It hasn't made back all the losses for the NASDAQ. However, we expect it to make up all the losses, simply because of the time it's going to take for the market to grind up, and we're okay with that right now. So that is a long short. And then we also had another short idea that should the Russell, because the Russell is the weakest, should the Russell trade up into this level, which it did on Wednesday, we're willing to take a short once it closes back out of this range and go for a move down into 1117 and then 1108 first. But as you can see here, we both have long, short, or north-south trading and investment ideas through our MoneyFlow service. Those are 3 ideas that we had sent to our clients. And we also talked about a short Canadian dollar idea, which it is in effect right now. As you can see, we got stopped out earlier on this week in our utilities trade. We were riding our utilities trade for a little over 2 weeks, and we got stopped out. Unfortunately, we got stopped out only to find out that we were right on the trade. We didn't give it enough breathing room. But some of you may say, well, why didn't you have your stop higher? Well, that's hindsight thinking. We could have placed it up here, and the more you tinker around with your strategy, the more, if you give the ideas that you have too much breathing room, then it doesn't afford you the luxury of being wrong more times than being right. And in this case, we were wrong a number of times for the month of July, but we still made out okay, and we remained profitable. So as you can see, these are the quality of ideas that we offer our premium members on a week-to-week basis that are derived from our bucket weekly market forecast. The bread and butter is in the bucket weekly market forecast. The bucket weekly market forecast, if used correctly, identifies the trades for you. I'll repeat that again. If the bucket weekly market forecast is used properly and you understand what it's actually doing, and if you don't, email us. If you can understand it and utilize it, which you should if you follow the methodology over a number of weeks to understand the strategy. If you think that you're just going to sign up and start being a star trader after a week, then this is probably not for you. It takes a little bit of time. However, you stick with it, you'll do well. You can check out our archives. You can check out our archive performance, and the proof is in the pudding. Give it a shot. Give it a chance. However, your first goal should be understanding how the financial market system works, and that's how the bucket weekly market forecast identifies these trading and investment opportunities. We hope you had a great week. You can always email us if you have any questions at service@wealthybucket.com. We hope you have a great weekend, and we thank you for stopping by the Wealthy Bucket.